All right, mates, welcome back to another episode of Trading Routine Session. My name is Alexander Nikitin. I am a professional trader and a developer of pattern search software. So what I do in these videos, I'm actually demonstrating you my approach, and for demonstration purposes I have created a special account. It is in front of your eyes. It is a small account. I'm not risking too much, but it is real one. It's not a demo account, so you can see how the real-time trading is performed. In my trading, I use the swing identification technique that I have created, and I use the advanced patterns. If you are new to this swing identification technique, you are welcome to visit my YouTube page. Let me load my browser. Let me go to YouTube page. Just click on my name below this video. My name looks this way, Alexander Nikitin. Okay, click on this searching box and search the secret like this. And the first video that you have is the secret to swing identification. This 24-minute video will show you step by step how the swings should be identified. This is the basics. If you don't know the basics, well, who you are, you can't identify the patterns that I'm looking at, and you can't identify the setups that I'm trading. Okay, so this is step number one. Learn the rules for swing identification and practice them. Step number two, go to my website. Here it is, www.ps-software.net. It is loading. Okay, click on this, learn the patterns tab. And here you have Gartley advanced formation, Bell advanced formation, Butterfly advanced formation, Cipher advanced formation. Click on whatever you are interested in. I use all four of them, all four advanced formations: Gartley, Ciphers, Bell and Butterflies. What do you have here? Not only you have the diagram that explains you the most commonly used ratios for that, but you have the detailed explanation here. The trade identification rules, trade execution rules, and trade management rules. So you see, you should have three parts to actually perform this strategy. You should know how to identify the patterns, you should know how to execute your trades, and you should know how to manage your trades. This is very important. If you lack some of them, the strategy is not complete and it won't perform itself the way it should perform. Okay, let's go back to my MetaTrader. What we have here, we have for our euro-dollar butterfly advanced formation, you can see the targets are this. Okay, I find my trades with pattern search software. I have coded the special algorithm that will find those trading opportunities. I can do two ways. I can draw them manually like this, you can see that, or I can draw them manually like this, one by one, or I can draw them automatically like this. Just switch to automatic, and look at this. If I enable the 25,000 bars, I do have 25,000 bars on my history on the chart, and if I enable auto scan, all of them will be analyzed, and I won't only have the trade that I'm looking at, I will also have the trades that were previously generated. So I can do the backtesting, and this is very, very important, the backtesting. Here, I can calculate how many winners I had, how many losers I had. I can also think of this. Maybe if I had the entry a bit lower and stop loss a bit wider, maybe what if I had the take profit here and take profit there. So whatever idea you have on your mind, you can check it. I personally prefer to use manual swing identification. So in this video I will use manual. Okay, the pattern is drawn, Fibonacci is stretched. You can see that the targets are adjusted to new Fibonacci levels. Originally they've been here, 382 and 618, and as price goes deeper and deeper and deeper, Pattern Trade Assistant, it manages my trade, it adjusts the targets. So if I stretch them, I will find out that they coincide with 382, new 382 and new 618. Okay, another trade is Aussie Canadian. Look at this setup. It was bullish butterfly pattern and it didn't hit the second target yet. I made it a bit lower because we have this Gartley. So if it goes higher, it will trigger the take profit, sell take profit to close my buy position, and it will trigger another sell to initiate my sell position. If you use 90% rule, you should stay away because 90% was already hit. Dollar Canadian, nothing wrong with this pattern, it is still valid, slightly exceeded the original entry and the targets were adjusted. Aussie Yen, here's the trade that I executed a bit earlier. You can see price never hit the original entry. This happened because I've been placing my trade on news, and when Pattern Trade Assistant does place the trade, it places it by this level of Fibonacci plus one spread, because I need the I need the trade be executed by ask price because it is a buying order, and the spread was widened on the news, and the level of execution appeared much higher than original entry. And after that, when dust settled down, the spread became lower, like here. We don't even see the spread here. It did execute it at the price that was higher. So accidentally, I've been executed a bit higher than the original entry. Okay, luckily it is in profit. Pound New Zealand, if you use 90% rule, you should skip this pattern because it already hit 90 and went to hit targets. Right now I am expecting price to hit this level once again to be executed. New Zealand Yen, very far from completion, but still you can have my numbers to set your trade as well. Euro New Zealand, this is the trade that I recorded yesterday. It hit the first target, it was closed. The second target is this, and the stop loss was moved to break even. Canadian Yen, another trade setup. If your broker hit this 90% and if you use that 90%, then you should skip this pattern. Euro Canadian, another butterfly advance formation, just buy it here and sell it if it goes there. New Zealand Canadian, a bit far from completion, but we still have all those odds in our favor that it will move lower. Okay, so that's it about the trade setups that I have on my radio, and as I promised, I will update you on my performance, so how this strategy performs itself. Let's go to this account settings. Let us start from custom period, that is 21st. Hey, come on. The custom period was 21st of August. So this is the initial date that I have started using this particular strategy, this particular approach. I'm not interested in the previous trading results. They are not connected with this particular approach. They were testing my other ideas. Well, it doesn't matter. Okay, let's see what we have with this approach. Save as detailed report, and in order not to be fooled with MetaTrader report, we should do slight XLS, slight modifications. That's why I will save it in Excel. Let's go to Excel, and here is the problem. Let me delete this. Here is the problem. If we go here, if we go lower, here's the chart, don't need it, and look at this number, percent of profitable trade, 49%. That's not true. Not 49%. That's not true. What is the reason? Why do I have 49%? My backtesting says that I should have 58%, 58 to 60. Why do I have 49%? What happens? What I'm doing wrong? Nothing wrong with that. This is only because MetaTrader calculates it incorrect way. You see, this was a zero trade. What is a zero trade? My position has two trades. First one is aiming first target, second one is aiming the second target. If the first target is closed, the second position, the second trade is the stop move to break even, and it is never a loss. If price reverses and hits my zero, I am profitable overall on this pattern. On the whole position, I am profitable. I never had a loss. I had first target win and a zero. But MetaTrader calculates it as a loss. Sometimes it is okay, it is a zero, but sometimes it is a loss. And I would say that in most cases it is a loss. In most cases it is a slight loss. So what I am to do? Let me turn those slight losses into slight positives. That's it. To do that, I will filter some trades. Filter, go in here first and let me delete cancelled. We don't need them, yes? Cancel trade, we don't have any impact on our statistics because they were cancelled. How many cancelled trades? Oh, you can see half of all the trades placed, they turned into cancelled. Show all. And now we should go here and we should select those zeros. Show me those zeros. Okay, my smallest risk was $7, so everything that is less than that, it is a zero plus slippage plus commissions plus swap plus some other thing. Okay, and my smallest winner was 6, you can see that. So everything that is below 6, this means it should be a zero trade. Now let's do the slight modification to be calculated correctly. It should be let's say 0.00001, slightly positive. This is the only reason why I do that. It won't anyhow affect the overall performance of the strategy. Okay, and another thing is this deposit balance AB. This is a bonus given by my broker, 5% spread cashback, something like this. Now it is done. As you can see, what do we have here in this report? We have type, we have size, item, price, stop loss, take profit, close time, price, commission, taxes, swap, and so on and so forth. We have profit in money, but we don't have profit in pips. Oh, that's not good. Let me calculate the profit in pips. So to calculate the profit in pips, I am to do this. This equals, and this way I need to type a formula. If the profit is more than 0, then calculate the amount of pips, then absolute number of closing price minus open price. So what this means, so if the profit is more than 0, yes, then calculate the amount of pips between the price and another price, close price, open price, between the two prices. Calculate the amount of pips and show me the absolute number of that pips. So if it is negative, show me it is positive. If it is positive, show me it being positive as well. Because our cell says it is a winner, it should be always positive. regardless of that being a sell or a buy, and regardless of them being negative or positive. So it should be always positive. That's why it should be ABS. And if it is not more than 0, if this cell is not more than 0, then you should do this. You should do the same but invert it. Control C, Control V. It should be always negative. If it is a loss here, this should be always negative. Done. This is the formula. Let me have 1, 2, 3, 4, 5. 5 zeros, because I have a 5-digit broker. Let's go here. Okay, nice. So what's wrong with this calculation? What's wrong with this calculation? This large amount of pips, because it is CHF JPY. You see? CHF JPY, and the amount of pips is enormous. So unbelievable to have that much pips, that many pips here. With 5-digit brokers, we should multiply by 5, and with 3-digit brokers, we should multiply it by 3 digits. To do that, I am to type the formula. If the item equals, let's say, euro, in brackets, in quotes, euro JPY, then you can see it gives you the hope. If it is this, then you should do that value if it is true. What should be the value if this is true? I want this to be multiplied by 100. 100 is the 3-digit number. 1, 2, 3. Because of 3-digit, if it is a euro yen, it should be 3-digit. Okay, but what if it is not euro yen? Do the following. Do another if. And this time not euro yen but pound yen. GBP. But what if it's not pound yen? Yes? Do the following. But this time it should be Aussie yen. AUD. And what if it's not Aussie yen either? Then you should check, maybe it is a New Zealand yen. But what if it's not a New Zealand yen either? Then check, maybe it is a Canadian yen. What if it's not Canadian? Okay, check, maybe it is Swissy. What if it's not Swissy? Check, maybe it is dollar yen. And what if it's not a dollar yen either? I'd say, oh, I don't have any yen pairs left. Then, if it's neither of them all, then multiply it by 5-digit. So it should be 02 multiplied by 5-digit. 5-digit is this. 10,000 is 5-digit. You have 4 zeros and 1. And now let's close all those brackets that we opened. 1, 2, 3, 4, 5, 6, 7. So we open 7 left brackets. You can see 7 left brackets. So we closed 7 brackets as well. And you can see the magic of this. Let me do it this way. Okay. If I stretch, it fills the same formula. And it calculates pips correctly. Not 129 pips, but 12 and 9. You see? Not 0.039 pips, but 39.7. You see? This is the amount of pips. Amount of pips calculated correctly this time. Okay, hope you will learn this formula. Hope you will learn how to code Excel. The programming languages are pretty simple. If then if you have that if-then mindset, you have a pretty good advantage over the rest of traders. If then, if then, if then. Okay, now let's calculate the statistics. How many trades I have? 179. Good. How many winners I have? So it should be equals count if. So count if. What is the range? Let's take the P range. And within this P we have starting from P2 to P1 something. Yes, 180 I suppose. What is the last trade? Last trade is 180. Yes, you can see this range. I may stretch that higher, lower to see that. And the beginning is, yes, P2, the second line. Perfect. And okay, it will count everything, but the criteria, you should not count everything, but the criteria should be more than 0. Count only those that are more than 0 and tell me how many more than zeros we have. Oh, come on. This shouldn't be that. Oh, count if this. Sometimes within these trades we have more or equal than 0 because sometimes we have been this. Okay, absolute pips. So 108 trades were winners. Profitable trades 49. Are you sure that I have 49 accuracy? Let's calculate. Winners, total amount of winners divided by total amount of trades. So what is my true accuracy? 60%. 60.34. See this? Total amount of winners, because my zeros are winners as well. Why should you calculate them as zero as negatives? Okay, let's calculate the amount of losers. If you are interested, this equals total amount minus what is positive. Yes, this is the amount of losers, shouldn't be negative. And this equals 1 minus this, come on, equals 1 minus this. So we have it this way, 39.66% of losers. Now it looks good. Okay, average profit trade and average loss trade. They are given in money value. Yes, money, amount of dollars I'm risking. I want to calculate the pips, average pips winner, average pips loser. Okay, what I should do? We already calculated the amount of winners. Control C. So this formula is helpful. We just paste it here. Control V. This is the amount of winners, and instead of count we can change only one word. Instead of count we should type average. You see, average. This is the formula. Average if, and this stays the same. Tell me the average of positives trades more than 0 within this range. Tell me that. 47 pips. You see. Okay, let's calculate the average loss. Copy. Go here. Paste it. Average loss should be what? It should be less than 0. That's it. Pretty simple. It is 41. 47 is average winner, 47 pips. 41 is average loser. Okay, that's good. Let's calculate average risk reward. So the average risk reward equals average winner divided by average loser. I don't this stay negative, so I should ABS, absolute number. I don't need this to be negative. This is negative, yes. If I divide it by negative, the whole number will stay negative. So the average winner is 1.13. Let me make them the same. 1.14 roughly. 1.14. Okay, so let me show you something else. If we go to Kelly position size calculation. What is the Kelly position size calculation? This is actually the position size that shows how much I am to risk in order not to lose all of my account. how much I need to risk. Okay, and it is based on my risk to reward and on my accuracy. So my accuracy right now was, what was it? 60 something percent, yes? 60.34. Okay, 60.34. That was my accuracy. And my risk to reward was 114. I remember that, 114. So it says that I am to risk 7.67 on position, but it should be 3.83 on one trade. So it stays almost the same that I have right now. I am risking 7.9, and if we divide it by 2, you see 7.9, if we divide that by 2, it will be 3.85. So I am risking the same. So how this Kelly percentage is calculated? If you need the formula, it is calculated this way. Let me draw it. Light shot. Of course, if you have it negative, you should stay away from your strategy. It means that you should not risk anything. If you have it 0, you should stay away as well. So the formula looks this way. The risk you should have on your strategy in order not to lose everything, percentage, the fraction of your account. How much should you risk? It equals your accuracy multiplied your risk to reward minus 1 plus 1, and it should be divided by your risk to reward. So if you have this position, yes, you will never lose all of your account, but your drawdowns maybe 99%. You will never lose, but your drawdowns are 99.999%. They may be. So if you don't want to risk that much, 99%, what you should do? You should multiply it by maximum allowed drawdown. Let's say you only wish that to be 0.25. So you should multiply it by 0.25. And you will have not the full potential of your strategy, but you will only have a quarter of that, a quarter of your power. You are using 1/4 of the power of your potential strategy. So here in this example, I am using only 1/3 of the total power. So if I say I am free to use 100, then you see I should risk 25%, and I will never lose, but my drawdowns sometimes will be 90, 80%, and so on. So, but I don't want that large drawdowns. Maximum drawdown should be 30. Maximum. In whatever worst case scenario, it should be 30%. So if I would risk 7% on a single pattern, I will never have a drawdown more than 30%. See that calculation? Pretty simple. Pretty simple. So you can see C2 multiplied risk to reward plus 1 minus 1 divided by risk to reward. So C2 equals accuracy. C2 stands for accuracy. This is accuracy, C2. B2 is the risk to reward. So accuracy multiplied by risk to reward plus 1 minus 1 divided by risk to reward. And divided, multiplied by this 30% to have less power. Not the whole power, but less power. Don't save it. Okay, once I have the objective evaluation of my strategy, and once I know that I have 60% of trade and my risk to reward is above, that is not negative, what should I do? What should I do when I have the results exactly coinciding with what I had on my backtesting? What should I do? I should continue trading, continue executing the same positions over and over again. And I shouldn't be afraid of those periods of drawdowns. You see, those periods of drawdown come, but then they are recovered. For now, I am in a drawdown that lasts for 2 weeks already, so I am moving sideways. What should I do to recover that? I should continue doing the same, and eventually I would have those breakouts again and again, and then I will consolidate a bit, and then again and again breakouts, because I know my strategy contains both winners and losers. It does not contain only winners, it contains both winners and losers. If I try to delete losers, if I try to avoid losers, I will avoid winners as well. Without my winners, I don't have losers. My winners are actually investments. If I don't invest anything, I don't have return on the investment. Pretty simple. So every time I have a loser, this is my investment. Next time to have a winner. Maybe next time I will have another loser, another loser, another loser. The more I invest, the more I have in return. Pretty simple. So I just trade the same, waiting until it does everything by itself. Nothing should be changed. Okay, hope you understood what I was trying to explain in this video. Until then, good luck, good trading. Oh, just forgot, hit like button. If you find this video useful, hit that like button, subscribe, share this video on social media, and comment. Tell me about your experience, tell me about, I don't know, your thoughts. Maybe you have something that you want to hear about in my next videos, maybe. That's it. Until then, good luck, good trading. Hope to see you soon.